Today's presentation is brought to you by the Texas Comptroller of Public Accounts. Hello, everyone, and welcome to today's webinar, Starting a New Business in Texas. My name is Melissa Schultz. I will be your moderator for today's webinar. As a reminder, this presentation is intended as a general guide and not as a comprehensive resource on the subjects covered. It is not a substitute for legal advice. I would like to now introduce our presenter for today's webinar, Christy Guevara with Tax Policy. Just a quick background on Christy. She has been with the Comptroller's Office for over 5 years and is one of our expert trainers on starting a new business.
Hello everyone, and thank you for joining me today. As Melissa said, my name is Christy Guevara, and today we'll be discussing starting a new business in Texas. The Comptroller wants to make doing business in Texas as easy and friendly as possible. If you didn't know, the Comptroller of Public Accounts is in charge of the state's finances, acting as tax collector, accountant, revenue estimator, and treasurer. As you can see here, we have our Comptroller Glenn Hager visiting with several Texas businesses. In this webinar, we'll cover some of the main components in starting a new business in Texas. I will provide a general overview of different business structures, the registration process, collecting and reporting tax, and where you can find helpful information on our website. When starting a new business, one of the first things you should determine is your business structure. The decision about the type of business structure is a decision that you should make in consultation with a tax practitioner. Will you be operating as a sole owner? Meaning, are you a single individual who will be engaged in business without the need of a formal organization? Or maybe a general partnership in which two or more individuals establish and run a business together. For example, if Melissa, our moderator, and I were to start a cupcake shop, we would be a general partnership. We are two individuals that will be running a business together. Now, with a sole owner or a general partnership, there is no need to file any formal registration with the Secretary of State. However, if you choose your business to be a limited liability company, corporation, or any other type of legal entity, you will need to register with the Secretary of State, which we will talk about later in this webinar. Each person who is conducting business or providing professional services and is not a corporation, limited partnership, or limited liability company must file an assumed name certificate, also known as a DBA or doing business as, with their local county clerk's office, so that a record of the business is available. If you are a legal entity, such as a corporation or an LLC, who is conducting business or offering services, you must file an assumed name certificate with both the Secretary of State and your local county clerk. For more information on registration of a legal entity, contact the Secretary of State. Keep in mind, the Comptroller's Office does not handle this first step. We do not process or set up the registration for assumed name. Okay, so you filed for an assumed name certificate. Now you may ask yourself, do I really need a sales tax permit? If you are engaged in business in Texas and you sell tangible personal property in Texas, lease or rent tangible personal property in Texas, or sell taxable services in Texas, then you must apply for a Texas sales and use tax permit. Shown here is an example of a Texas sales tax permit. Once you have received it, you must post it at your place of business. As a seller of taxable goods or services, this permit allows you to collect and report Texas sales tax that you have collected from your customers. Now, I bet you're wondering, what is considered tangible personal property, and what really is a taxable service? Let's go ahead and review what is tangible personal property. Tangible personal property is personal property that can be seen, weighed, measured, felt, or touched, or that is perceptible to the senses. Keep in mind, this definition also includes computer programs and telephone prepaid calling cards. Tangible personal property can be items such as a lawnmower, tools, heavy machinery, gym equipment, or even this open sign that you hang in front of your business are all considered tangible personal property. Now that we've covered tangible personal property, let's go over taxable services. There are 17 broad categories of taxable services. I'm just going to go over a few of the most common ones here. Amusement services. This is defined as entertainment, recreation, sport, pastime, diversion, or enjoyment that is a pleasurable occupation to the senses. This could be things such as gym memberships, tickets to the rodeo or concerts, and sporting events such as football or basketball. Data processing services includes using a computer for word processing, data entry, production, compilation, storage, or manipulation. Examples of data processing include check preparation, accounts payable or receivable preparation, web hosting, website creation and maintenance, and data storage, just to name a few. Another taxable service includes all charges for labor and materials to rebuild, replace, alter, modify, or upgrade existing non-residential property. Non-residential real property includes commercial establishments such as manufacturing facilities, restaurants, offices, farms, ranches, and hospitals, as well as parking lots, retention ponds, and similar improvements, but does not include property used as a family dwelling, such as apartment complexes, nursing homes, and retirement homes. The repair, restoration, or remodeling of non-residential real property does not include the addition of new usable square footage or scheduled and periodic maintenance. If you are involved in this type of work, we have a series of contractor videos that give a general overview of the tax responsibilities specifically for contractors. You can find these videos on our Comptroller YouTube channel, which is TX Comptroller. The next taxable service is real property services. These types of services are some of the more common ones we see. Real property services include pest control and extermination, garbage and other waste collection or removal, janitorial and custodial services, including parking lot sweeping or cleaning, landscaping and lawn maintenance, including tree surgery and plant leasing, and surveying. In addition to the taxable services we just mentioned, other types of sales that may commonly be considered services are taxable as the sale, processing, or remodeling of tangible personal property. Examples of labor that result in the sale of a taxable item include photography and videography, producing artwork, printing, calligraphy, embroidering, custom sewing or tailoring, woodworking, welding, catering, and assembling products such as computer systems, toys, furniture, or equipment. If you want to see a list of all taxable services, check out publication 96-259 titled Taxable Services, available on our website, comptroller.texas.gov. We have most of our taxable services categorized to make it easier on you. Just choose the drop-down that best describes your service. Now that I've covered examples of both tangible personal property and taxable services, think about your new business and what you are selling or providing as a service. Will you need a sales tax permit? If the answer to the last question, do you need a sales tax permit, was yes, then let's cover how you can apply for one. There are several ways you can apply for a sales tax permit. Now, the easiest, in my opinion, and definitely the quickest, would be online at comptroller.texas.gov. You can also register by mail by sending in the sales tax application form AP-201, or you can apply in person at a local comptroller field office. There is no fee to apply for the permit. Once we receive and process the application, we will mail you the physical sales tax permit to be posted at your place of business. If you decide to go to one of our 21 local field offices located throughout the state, you do not need to make an appointment. They are available on a walk-in basis and are open Monday through Friday, 8 a.m. through 5 p.m. To find a local field office near you, check out our locations available on our website, comptroller.texas.gov. Now that we've covered how to apply for a sales tax permit, let's cover how you can purchase items for your inventory to sell. When purchasing these items, complete Form 01-339 titled Texas Sales and Use Tax Resale Certificate, shown here, to give to the seller. If the seller accepts the properly completed form, the items you purchase for inventory will be exempt from sales and use tax. A resale certificate is accepted in good faith, and the seller lacks any knowledge that the sale is not for resale. Keep in mind there is no separate application required to issue a resale certificate. The Form 01-339 can be found on our website. The seller keeps this form for their records to show why they did not collect sales tax on a sale. At this point, let's say you have your sales tax permit, and maybe you've made a couple sales and collected tax, or you haven't quite opened for business yet. Either way, as a sales tax permit holder, you must file a report regardless if you sold anything or not. Sales tax reports are due on the 20th day of the following month ending the period. For example, if you are a monthly filer, your February return is due on March 20th. When a reporting due date happens to fall on a Saturday, Sunday, or a legal holiday, the reporting due date becomes the next business day. Paper returns will need to be postmarked by the due date, and electronic filers have until 11:59 p.m. Central Time on the due date. Your next question may be, how often do I need to file a sales tax report? Well, how often you file depends on how much you collect in sales tax. Looking at the chart, if you collect less than $1,000 in sales tax, you will file yearly. Between $1,000 and $1,499, you will file quarterly. And if you collect over $1,500, you will file monthly. When you first apply, you will be notified by letter, after your application for a sales tax permit has been approved, whether you will file monthly, quarterly, or yearly. Here is a breakdown of the due dates based on how often you file. Typically, a report is due on the 20th of the month following each reporting period end date, unless the 20th falls on a weekend or a legal holiday. When this happens, the due date will be moved to the next business day. Let's look at an example from this chart. If you applied for your permit in February and you are a yearly filer, meaning you file once a year, your first report will be due on January 21st, 2020. In this case, the due date falls on Tuesday, January 21st, because the 20th of the month falls on a legal holiday. Quarterly filers file 4 times a year. The first quarter covers the reporting period from January 1st through the end of March and is due in April. As an example for 2019, if you are a quarterly filer, your first report is due on April 22nd, 2019. In this case, the 20th falls on a weekend, so the due date is moved to the next business day. Monthly filers file once a month. For example, the report covering the period from February 1st through the end of February is due on March 20th, 2019. In this case, the 20th of the month falls on a business day and not a holiday or weekend. A schedule of all due dates can be found on our website, comptroller.texas.gov. When it comes to filing and paying your sales tax return, the quickest and, in my opinion, easiest way to report is online through WebFile. Our online system makes submitting your returns electronically fast, easy, convenient, and more secure. Plus, there are many other benefits to using WebFile. First off, it is free to use and can be accessed 24/7 from any device with internet access. It has built-in edits to help reduce filing errors and automatically calculates the tax due for you, which I don't know about you, but this is a huge time saver. Webfile also offers a variety of payment options, such as using a bank account or credit card. It provides you with a confirmation page immediately after you submit your filing, which can offer you some peace of mind. And you can go back and view your transaction history and prior sales tax reports. If you need help getting started with Webfile, check out our YouTube channel, TX Comptroller. There you'll find Webfile how-to videos to guide you step by step through the filing process. For example, we have videos such as how to access your tax account and navigate Webfile, how to locate your Webfile number, and how to create a Webfile account, electronically file and pay, just to name a few. New businesses may also be subject to franchise tax. Franchise tax may not be what some of you are thinking it is. Franchise tax is a privilege tax imposed on each taxable entity formed or organized in Texas or doing business in Texas. If you remember, earlier in this webinar, we talked about the different business structures. Not all business types are subject to franchise tax. For example, sole proprietorships and general partnerships are not subject to franchise tax and do not need to file franchise tax reports. Keep in mind, the only general partnerships that are not subject to franchise tax consist of natural persons only. What are natural persons, you may ask? Well, it's defined as a human being or the estate of a human being. The term does not include a purely legal entity given recognition as the processor of rights, privileges, and responsibilities, such as a corporation, limited liability company, partnership, or trust. Certain entities that are subject to franchise tax may qualify for an exemption. Nonprofit entities that have requested and been granted an exemption from the Comptroller's Office do not have to file franchise tax reports, including the Public Information Report or Ownership Information Report. If the entity has not requested or been granted an exemption, it must file all reports. A common misconception is if an entity is registered as a nonprofit, they are automatically exempt from franchise or sales tax. This is not true. They must apply for exemption. For more information, check out our website and search exempt organizations. New veteran-owned businesses are not subject to franchise tax for an initial 5-year period, but must file Form 05-163 Texas Franchise Tax No Tax Due Report for each of those years. To be considered a new veteran-owned business, an entity must be an entity formed or organized in Texas on or after January 1st, 2016 and before January 1st, 2020. Be 100% owned by a natural person or persons, with each owner being an honorably discharged veteran from a branch of the U.S. Armed Services, and provide a Texas Veterans Commission issued letter of verification of veteran's honorable discharge for each owner. For more information, go to our website and search Veteran-Owned Business and Texas Franchise Tax. So we've covered which businesses are not required to file franchise tax reports. Now let's go over the business types which are subject to franchise tax. Legal entities that are subject to report and possibly pay franchise tax include, but are not limited to, limited partnerships, corporations, limited liability companies, and professional associations. As we discussed before with legal entities, if you choose a business structure such as a limited liability company or corporation, you will need to register with the Secretary of State. For more information on registration, contact the Secretary of State at 512-463-5555 or visit their website, sos.texas.gov. At this point, you're probably wondering, how do I get set up for franchise tax? Well, there's no real application for it. As a legal entity, once you have registered with the Secretary of State, the Secretary of State will automatically forward your information to the Comptroller's office. Our office will then set your entity up with franchise tax and assign it an 11-digit taxpayer number. Once your entity is set up for franchise tax, you are responsible for reporting and possibly paying franchise tax. When reporting your revenue for franchise tax purposes, you have three options for your annual return. These include the No Tax Due report, Easy Computation report, or Long Form report. In addition, you must file an annual Public or Owner Information Report form as required by law and any payment due. The annual franchise tax report and payment is due May 15th. If May 15th falls on a weekend or holiday, the due date will be the next business day. For example, if you registered your entity anytime in 2019, your first franchise tax report and payment is due on May 15th, 2020. The most common franchise tax report filed is the No Tax Due. To qualify for this return, an entity must meet one of the following requirements. The entity is a passive entity as defined in Texas Tax Code Section 171.0003. In general, to qualify as a passive entity, the entity must be one of the following for the entire period on which the tax is based: general partnership, limited partnership, limited liability partnership, or trust other than a business trust, and at least 90% of an entity's federal gross income for the period on which margin is based must consist of specific sources of income, such as dividends, interest, or foreign currency exchange gain, or net capital gains from the sale of real property, just to name a few. It's important to note that unlike federal income tax, rent is not considered passive revenue for franchise tax. I know that's a lot of information, but don't worry, all of this can be found on our website, comptroller.texas.gov, on our franchise tax webpage. There you'll find all the qualifications in Texas Tax Code Section 171.0003 or our Franchise Tax Rule 3.582, Margin Passive Entities. Has a total annualized revenue less than or equal to the no tax due threshold. The majority of entities who qualify to file this report have a total annualized revenue below the no tax due threshold. The no tax due threshold is adjusted each even-numbered year. For example, for the 2019 report year, the no tax due threshold is $1,130,000. So for the report year 2019, which covers the accounting period of 2018, if your business only had $100,000 in total annualized revenue, you would qualify for the no tax due report. The entity has zero Texas gross receipts. This means the entity has no Texas-sourced revenue. Is a real estate investment trust, which is an entity defined by the Internal Revenue Code Section 856. And finally, the last qualification for the no tax due report. The entity is a new veteran-owned business, as we talked about earlier. Just like sales tax, you can file and pay your franchise tax reports online, by mail, or in person at a local field office. So you've got your business up and running. Now let's talk about what kind of records you need to keep for both sales tax and franchise tax. If you are either a seller of taxable items or a purchaser who stores, uses, or consumes taxable items in Texas, you are required to keep business records so that an authorized representative from the Comptroller's office can verify the accuracy of your sales and use tax returns. Failure to keep or provide records can result in the Comptroller's office taking various actions, including an estimation of tax liability or a suspension of the sales tax permit issued to the business. In general, for sales tax purposes, You must keep records that reflect the total gross receipts from all sales, rentals, leases, taxable services, and taxable labor, and the total purchases of taxable items. Additional records must be kept to substantiate any claimed deductions or exclusions. For more information on the types of records you need to keep, check out Sales Tax Rule 3.281, Records Required, Information Required. Franchise tax is a little bit different. Records required for franchise tax include any source that provides data to calculate revenue for franchise tax reporting. An example of these could be combination of elimination schedules for combined groups, or federal tax reports, or even accounts payable or receivable ledgers, just to name a few. For both sales tax and franchise tax, you must keep records for at least 4 years unless the comptroller gives written authorization for earlier destruction. In addition, if the comptroller is auditing your records, you should retain all records for the period being audited until the audit is completed. If you appeal the findings or file a claim for refund, retain your records until your case is resolved. Thank you everyone for joining me today. I hope you feel more confident starting your new business in Texas. If you would like to learn more on Texas taxes, we offer various resources on our Tax Training Resources webpage, such as our taxability videos, podcasts, seminars throughout the state, and of course, we offer quarterly webinars covering a variety of topics. We also have our state tax automated research system, also known as the STAR system. STAR provides access to a variety of document types that may be useful in researching Texas tax law and tax policy. Documents that provide the comptroller's interpretation of the tax laws are accurate for the time periods and facts presented in the documents.
All right, thank you, Christy, and thank you to our attendees. Let's go ahead and review some of the questions we received during today's webinar. All right, Christy, here's the first one. Do I need a separate taxpayer number for each place of business I own?
No. If you have multiple places of business, you will receive separate permits for each business location displaying the same taxpayer identification number, but with separate outlet numbers. In general, each seller must have a tax permit for each active place of business. A place of business is any location operated by a seller where a seller receives 3 or more orders for taxable items during a calendar year.
Great. All right, here's another one. Do I need to submit a resale certificate each time I make a purchase?
Yes, you need to submit a resale certificate each time you make a purchase. If a customer purchases exclusively for resale, a seller can accept a blanket resale certificate. The certificate should state that all purchases will be resold in the regular course of business and the general nature of the items purchased.
All right, thanks, Christy. Here's another one. Do I still need to file a sales tax return if I have no taxable sales to report?
Yes, even if there are no taxable sales for a certain period, you are still required to submit a return in order to maintain an active and current sales tax permit. There are several ways you can file a zero no sales tax due return. You can download a form and submit a paper return, file online through our web file system, or you can use Telefile, our automated phone system, by calling 888-434-5464.
Okay, Christy, here's another one. Do I still need to file a franchise tax report even if my entity made no revenue?
Yes, even if you made zero revenue, you must file a no tax due report and choose the option the entity has zero Texas gross receipts.
That's right, I remember you covering that. Next question. Do I need to apply for a sales tax permit if I buy another business?
Yes, Each new business, such as a corporation, partnership, or sole proprietor, must apply for its own permit. The permit cannot be transferred from one business to another.
Great, thanks, Christy. Here's another one. Do I need to tell the comptroller's office I'm closing or selling my business?
Yes, you can notify our office that you are closing your account by entering your information on the Close Business Location webpage. That's available through our website, comptroller.texas.gov, and select Close All Outlets for this taxpayer number. Now, just a heads up, on this online form, we will ask you for confidential information to verify you are with the business.
All right, Christy, now I have a follow-up question to that one. What kind of confidential information do we ask on the online form, closed business location? What does it ask for?
For security purposes, it will ask you to verify two of the following: total sales of your last sales tax return filed, total amount paid of your last sales tax return filed, total revenue from the previous year, or you can provide your web file number starting with RT or XT. Again, you only need to provide two of those four options.
Got it. All right. Now we have time for one more question. And this kind of relates to the previous questions of buying or selling your business that you just reviewed. All right. So they asked, how do I know if the business I am buying owes Texas taxes?
Great question. If you plan to buy an existing business, the inventory of an existing business, or the name and goodwill of an existing business, be sure to contact our office and request a certificate of no tax due. Make sure to check out publication 98-117, Buying an Existing Business, for information on requesting a certificate of no tax due. Again, that's publication 98-117, Buying an Existing Business.
Wow, thanks, Christy. And thank you to our attendees for asking such great questions. If you have other questions, please submit them to tax.help@cpa.texas.gov or give us a call at 800-252-5555, and that's going to be for sales tax. Or for franchise tax questions, give us a call at 800-252-1381, as you see there on the screen now. All right, thank you again to our attendees and our presenter today, Christy Guevara. We will continue to host more taxability webinars throughout the year, so make sure you check back with us periodically on our tax training resources webpage. In the meantime, y'all have a great day.